I'm Brian Winnekins at the NAFB convention in Kansas City. I'd like to say thank you to Annabis Silo of Durand, also the Animal Wellness Center of Buffalo Valley and Growth Energy for sponsoring our broadcasts from the convention. I'm with Elaine Kub. She is author of Mastering the Grain Markets. We're going to talk a little bit about her book today. Elaine, well, good morning and thanks for joining us. Well, first, for those that may not know what the markets really do, tell us, what do they do for those that they don't understand what I'm talking about or what my wife is talking about on the radio?
Right. When you hear those numbers on the radio, those are typically quoting the prices in Chicago, the futures contracts there. And those are a financial substitute for the actual grain that's produced and sold and traded throughout the countryside. So whenever somebody's buying that, they're willing to sell at that price. When they're buying that, they're willing to buy grain at that price. So that helps bring prices fair, and it has a nice, fair, efficient price for the physical commodity that's out in the countryside.
Well, let's tell us about the book now. It's called Mastering the Grain Markets. What do you write about?
Well, I write about the grain markets. I do a column for DTN, and I've done market analysis for a long time. So I wanted to take my experiences as an analyst and as a futures broker and as a grain merchandiser. I've traded the cash grain contracts also, and sort of put that together in a book and show how the whole market sort of comes together and works.
And again, for some of, we'll start off with farmers. What are some of the suggestions you have for them?
Well, I think it's helpful for them to understand, the people on the other side of the trade. So what are the cash grain merchandisers that they're selling their physical grain to? What are they trying to accomplish with those basis contracts that will help you be a better trader? Your storage, how can you capture the carry in the market, the price changes from one month to the next? And what are the speculators in Chicago? What are their motivations, and how can that help you predict price trends in the future?
Now, for those that are end users, what are some of the things you talk about? Because they're totally different from what the farmers are trying to accomplish and what the speculators are trying to accomplish.
That's right. They're a lot more focused on basis, but a lot of the same concepts are equally as important to them. For instance, that carry I mentioned, how long or how much will it cost you to be storing grain from one month to the next? How can you conduct arbitrage opportunities from one geography location to another? So all of these things come into play for everybody, but they're particularly important for the cash grain traders and the merchandisers and the end users.
Now, we'll talk about the one group that's a lot of times, a lot of people, it doesn't matter if they're even involved in the markets, the people that everyone doesn't like, those speculators, because they feel like a lot of people say they're just in it for the money. That's kind of sort of true, but they do provide a pretty good service.
Yeah, that's absolutely true. They're in it for the money, but that's how they make markets work. If they see an opportunity to make money, that means that the market is inefficiently priced in some way. So if the market is overpriced, they can make money by selling it and bringing the prices down, and vice versa. So they can bring prices up if they feel that the market is more bullish than the price presently expresses. So in that way, they can do a great service and bring those efficient prices available to farmers and the industry.
One thing a term you just used, again, for those that may not understand, you said bullish. A lot of folks will hear, they ask me, why do you talk about bulls and bears? And it's just kind of a market speak for the way the market's going, right?
Right, yeah, it's confusing when you're talking about the cattle markets are bullish, but we don't trade bears, so you can keep that in mind. Yeah, bullish means that you have an opinion that the price is going to go up, and bearish means you have an opinion that the price is going to go down. It does not necessarily mean that you expect to lose money, because people can make just as much money when commodity markets go down. It's not like the stock markets.
And finally, I guess, again, with even the speculators, are they always just a generally nervous lot? Because sometimes things happen. Two guys in Walla Walla, Washington sneeze, and that caused corn to drop the full limit on the day. Why are they so nervous?
Yeah, they're pretty panicky. They're pretty finicky. Well, a lot of them are trading a lot of money that is a lot at risk, and a lot of them are trading other people's money, and there's just a lot of opportunities. Sure, they can trade grain, but they could take that same cash and trade Japanese yen or coffee or anything. So they really have to be mindful of the best opportunity out there, and they can move their capital around wherever pretty quickly.
And if folks would like more information on your book and get your book, how can they find out?
Well, they can find it on Amazon, but they can get more information or contact me by going to my website, is www.masteringthegrainmarkets.com.
All right. Well, again, Elaine, we appreciate you joining us today.
Thank you.
That is Elaine Kub. She is author of Mastering the Grain Markets from Kansas City in the National Association of Farm Broadcasting Convention. I'm Brian Winnekins on Real Country 1430 WRDN.